Hello and welcome to today's webinar, BPaaS, How Process Outsourcing Helps Health Insurance Providers Compete. Before we get started, I'd like to review a few housekeeping details. Today's webinar is being recorded and an online archive of today's event will be available a few days after the session. If you have trouble seeing the slides at any time during the presentation, please press F5 to refresh your screen on a PC or Command R if you're using a Mac. You may ask a question at any time during the presentation by typing your question into the Q&A box located on the right side of your screen and pressing Enter. And finally, I'd like to remind you of AHIP's antitrust statement located in a link just below the slide viewer. We will, as always, comply with that statement. Among other things, the antitrust statement prohibits us from discussing competitively sensitive information. We're very fortunate to have with us today Mr. Loran Miller and Ms. Kim Ryals. Loran is a director at AArete Healthcare practice with 10 years of experience working alongside organizations to develop innovative strategies, increase operational efficiency, and improve profitability. Kim is a senior manager of business product management at Conduent. She has more than 20 years of experience working with regional and national health plans to implement software and services across all areas of payer operations. At this time, I would like to turn the floor over to Kim. Welcome.
Thank you for the introduction. I'm Kim Ryals with Conduent, and if you'll allow me, I'll take a brief moment to introduce Conduent to you. Just a few key highlights. Conduent has 63 distinct solution sets across several industries, with 80% of the Fortune 100 companies and more than 500 government agencies as our clients. We are very proud to say that 70% of these have been with us for 10 years or longer. We were recently recognized for Best Global Company Culture in 2021 and also for Best CEO for Diversity by Comparably. For this audience, though, I think the most important thing to share is that we support over 100 payer organizations helping to solve their needs through software and services. I'm excited that we're going to talk to you today about all these acronyms that are going on in healthcare about these types of services and the options and what they would mean to companies like yours. Nearly 3/4 of the United States insured population is touched by our services in some form or fashion. At this time, I'd like to introduce you to Loran Miller with AArete, who will be presenting with me today.
Thanks, Kim. Appreciate the handoff. And for those on the call that are not familiar with AArete, I want to take a moment to introduce myself and the firm. Loran Miller, a director in AArete's healthcare practice. AArete is a global consulting firm headquartered in Chicago. We have offices across the US, India, and the UK. We work across all industries with a particular focus on the payer and the healthcare side. So we work with both 100 plus payers around the country, as well as 100 plus provider organizations. Relative to today's conversation, we offer services in strategic profitability improvement, digital and data technology, and advisory services for our payer clients. In particular, our advisory services relative to today's conversation span a wide range of operational and strategic improvement initiatives for plans, ranging from unit cost reduction to IT modernization and market expansion and growth strategies. AArete brings an implementation focus to everything that we do. We are heavily focused on ideation all the way through implementation and work side by side with our payer partners to implement strategic initiatives and strategic opportunities. All of our opportunities that we work with our clients on are focused on achieving results in a compressed time frame, and we're excited to share some of our market expertise and ideas with this group today. All right, so we're here today to talk about outsourced solutions and BPaaS in particular. But before we get into some of the specifics, we wanted to take a moment here to level set some terminology that gets thrown around in the industry quite a bit. We know that a lot of this terminology has evolved and continues to change over time, but we wanted to think about kind of 4 key areas of health plan delivery and how we organize those within that framework based on their level of internal development and outsourced capability. So the first of these is an on-premise or fully owned plan solution. This is where we see plans demonstrate full ownership and accountability for the delivery of a core operational process. As an example, we'd select a health plan with a legacy-based claims platform who shares responsibility for both the delivery of the services as well as the IT infrastructure for the platform or software itself. Next on the range of the spectrum, we have software as a service. And this is where we have plan ownership of the delivery and the solution with vended ownership of the platform or software in question. So as an example that we'd like to share, just to level set, we would be talking about health plan outsourcing of a credentialing workflow or information management platform where the vendor is responsible for that customization and maintenance of that platform, but the health plan itself owns all the resource and business process requirements. Moving further on the scale of health plan outsourcing spectrum, we have a BPO solution. And this is a situation where a plan has ownership of the software or platform, but uses a vended outside partner to leverage their BPO solution. So in that case, the vendor would supply the resources and the processes for the execution of a particular health plan capability or operational process. And then finally, on the spectrum of health plan outsourcing, we have a full BPaaS solution. And this is where a health plan leverages an outside entity or vendor partner for ownership of the risk for both services and solutions. So this, as an example, would be a health plan that leverages a core adjudication processing system from an outside vended partner, as well as the claims processing services, both front end and back end intake for a claims processing system. All right, so now that we've kind of level set on these four kind of key areas of health plan outsourcing on the spectrum, I'll take a few minutes to give some perspective on what is driving outsourcing within the industry before Kim goes into each of these in a little bit more detail and the pros and cons of what this looks like for an individual health plan. All right, so as we enter 2022, we wanted to share some perspective on what is driving outsourcing in the market and what are plans responding to as market changes dictate internal plan needs. So first on the list, we have regulatory risk. With the advent of interoperability and other changes, state-driven mandates, and increased scrutiny of provider networks by regulatory agencies, we see an increased appetite from payers to leverage outsourced solutions to mitigate some of that risk. Good examples in this case where we see outsourcing reduce risk for clients is the interoperability rule as plans look to adapt to API mandates regarding patient access and provider directory, and a need to modernize systems in accordance with those rule changes. Other examples that we see at the state level include Medi-Cal and Cal-AIM program setting new targets and objectives for plans that require additional capacity and growth. So that has downstream impacts of additional responsibility and shared responsibility for health plans, as well as impacting those initiatives in particular and how payers respond to that increased responsibility within their plan. Second on the list here that we want to talk about today is market growth. we've seen a couple trends, over the last 10 years that have, had a significant impact on the demand for outsourced services in the payer industry. So a couple of these we've seen, incredible growth in Medicare Advantage over the last 10 years, with that market more than doubling. We've seen significant growth in the individual market, with that market growing as well. And at the same time, we've seen increased consolidation within the industry and the number of payers providing these services. So with those market factors in mind, they create both opportunity and risk for health plans that drives a need and a desire to outsource core operational services. So for example, for health plans that are looking to grow rapidly, looking to expand to new markets, looking to develop unique products, we see an increased appetite to outsource core operational services that may not provide incremental value to their long-term strategic growth objectives. So we see that in the market as a key driver. And then from a competition standpoint, as I mentioned, we see a need to differentiate products at the health plan level in order to compete versus growing market competitors. As a segue, as a result of that market growth, we see an increased pressure from a cost growth perspective on health plans. Around the industry, we have seen increased pressure on margins over the last few years. Increased competition in the Medicare and individual market, places downward premium pressure for plans, and a need to respond with administrative cost growth measures. So increasingly, we see health plans looking at outsourced BPO and BPaaS solutions as a means to address some of that market pressure and administrative cost growth. The next area that we see in the marketplace driving a lot of decision-making for outsourcing is value-based care. As we look at payers with legacy platforms, we look at an increased need on their end to outsource or provide partners or upgrade their existing CAP systems to make them compatible with the increased demands of value-based care. Many of the plans that we work with see these as key differentiators in their ability to deliver new products and efficiently compete with their market competitors from a value-based care standpoint. So we see a need for health plan capabilities to include capitated payments, bundled payments, and other alternative payment models. And for the individual plan, that will be driven by their ability to scale and meet those needs over time. Next on the list, we have, from a market perspective, labor market dynamics. I think this is something that we're all familiar with and have experienced over the last 2 years since the advent of COVID, but that has only increased the competition for talent, particularly when we look at individual markets that payers operate in around the country. There may be labor shortage relative to specific skill sets such as IT or software development, analytics. All of those in a given market lead payers to consider outsourcing as a way to more efficiently meet their core operational needs in a compressed time frame. And then finally, from a labor market dynamic standpoint, we see specialized needs, often in the medical management space, for clinical review and outsourced care management, where an outsourced solution often represents the best way to scale those specific needs around specialty review in order to meet increased demand. And then the last on the list of key market drivers that we wanted to highlight for today's conversation is consumer-driven changes. So as we've seen the growth of high deductible cost plans around the country, we see a change in consumer behavior and expectations as a result of these changes in plan structure. And so what we see is, increased digital expectations for these services, and increased visibility and sensitivity to price, as things like price transparency change the industry. All that means what we're expecting is, members today have different expectations than they did 10 years ago about access to 360 views, as well as real-time information for their members. In order to meet this need, oftentimes we will see health plans look to outsourcing as a way to fulfill this patient or member-driven dynamic.
Thank you, Loran. Appreciate it. So, given the marketplace and the driving factors that we've just talked about, what are the reasons health plans are moving into the market to find out more? So you see here a couple of items a couple of things we're going to go over that Loran's touched on. Many health plans are entering new lines of business or new markets, and they just don't have the in-house experience to pick up the plan and run with it. Individual markets can be especially challenging to set up. Medicare Advantage and Medicaid are two types of care, sometimes a blended level of care when you're managing both, where the complexity of the business just lends itself to getting a partner. Challenges are ranging from technical specification requirements for hardware and software to staffing, training, and desktop procedures. By the time the decision is made to move into a market and the funding is available, how much time is there left to develop everything that's needed before go live? Legacy systems are also becoming a problematic force for health plans, where they're having to go to partners or vendors to find something that's more flexible and more compliant. Health plans are innovative. It's a requirement to stay in business today. So how can a health plan incentivize providers to drive outcomes? Some of the so-called innovative payment structures are becoming common, and many systems that have been reliable since the 90s or even the 80s just haven't made the investment needed to be not just current, but flexible. In 1980, who would have imagined interoperability? And regulatory risk. Changes and regulations are a given. How fast can a plan adopt? And it's really a what's next question, because every time we turn around, there's a new regulation that we all need to support in some form or fashion. So, and whatever you choose for software or services, you've got to be ready to adopt. Audits are inevitable. We all want to be prepared and confident that the work our teams are doing can be measured and backed up by policy and procedures that support the actions and the requirements for the specific business. So I want to talk about a couple other outsourcing indicators. Another driver for outsourcing is consumer-driven change, something we just heard a little bit about from Loran. Interoperability is on everyone's minds. Is your plan ready for this change? Plans are looking for ways to drive the member experience, including directing care and influencing decision-making. Convenience factors are going to become a requirement. Can you pay your bill online? Can you use PayPal or Venmo to pay your premiums? Can you get a view of your EOB on a smartphone that's easy to read and understand what the member was supposed to pay and why they were supposed to pay it? Access to member data is going to be key. So let's talk a little bit about labor. As Loran mentioned, overall labor is scarce, and I dare say we're seeing it everywhere from restaurants to healthcare, especially when it comes to supporting legacy platforms. There are costs associated with developing training programs, hiring, mentoring, and retaining employees. Partners or vendors have the ability to leverage pools of employees and recruiting companies through scale. So sometimes it's about having the staff necessary to run just daily operations. When a plan runs into a backlog of some sort, sometimes it's easier to insert a partner to fill the gap until things are back in an acceptable range, or back to normal, if you will. But either way, taking the burden off of a health plan seems to be a true driver these days for partnering. freeing up the health plan to focus more on members and on outcomes. Growth also is something that we are seeing on a regular basis. We all know that there are costs associated with growing. Sure, you need people, you need all the things that we've just discussed, hardware, software, maybe real estate even. Where are your operations going to be housed? Where are they going to be hosted and secured? Is everybody working from home? What does it cost to set up the infrastructure for desktops or laptops if everyone's working from home? Outsourcing can make that easy because it takes those components and they're able to be delivered by a trusted partner. So I'm going to move forward and I'm going to show you a slide that we have all seen in some shape, fashion, or form. What are the components for success? It's people, process, and technology. In a BPaaS model, you're using all of these. You're using the people, the process, and the technology. But health plans go into the market sometimes for just one of these services. And so these need to be offered in a modular way so that they can be used by a health plan at the time that they need the resource. In a SaaS model, the health plan is managing the people and the processes, and only the technology is outsourced. In a BPO model, maybe you're just outsourcing for people and processes. And in a BPaaS model, you're looking for all three parts. So I'm going to delve into these a little bit more in depth in the next couple of slides. Let's talk about people. On the left side of the screen, you're going to see challenges that health plans are facing. And Loran spoke to these a little bit. He talked about the fact that there are less people in the market. It's difficult to find people. It's difficult to find people who have the right skill sets. It costs money to set up training programs, and there's a cost to training. Those people are working for you and getting paid during that window of time that they're ramping up and managing the accounts. So you as a health plan have customers, or you have consumers or group health plans, and those customers of yours need to be managed as well by the people that are in your organization. So what happens, you'll see on the right-hand side of the screen, what is it that a BPaaS model offers for this challenge of a health plan? One of the things that's offered is a center of excellence. So whatever line it is, whatever line of business it is that you're in or thinking of moving into, a BPaaS partner offers experienced staff at the very start of the project. Health plans can expect a dedicated team to manage their business needs for operations. How does that help? And why would a BPaaS organization benefit from a dedicated team? We'll see that in processes in a minute. BPaaS organizations have sourcing partners engaged daily on staffing needs for the future. They're always looking ahead and trying to bring in those additional backfill resources to ensure that the knowledge transfer from client to client remains consistent. Because BPaaS partners have larger staffing needs to meet the demands of many clients, they're able to leverage the sourcing partners to ensure there's a steady stream of workforce available to meet their existing and their new client needs. Staff development and training are standardized to ensure the training meets regulatory requirements like HIPAA and security, but also standard desktop procedures, which you really must have to be successful. Right alongside this are economies of scale. When the plan is ready to grow, the staffing needed to manage that growth is already there. This is true for one-time needs. When there's an overflow or backlog, the ability to staff within a few days' notice is critical. I'm sure we all experienced some of this during COVID and some reporting requirements and some changes in the way claims were going to be processed, and we all had to turn on a dime in order to meet the expectation of our members and of our health plan partners. So if you're inside a health plan, you have a couple of choices. You could bring in temporary staff, but it's expensive to bring in temporary staff, a lot of training for a one-time use situation, or you could hire full-time staff, but you may not have enough work throughout the rest of the year. Salaries and benefits are costly. So a BPaaS model offers flexibility and takes that burden off of the health plan so that the health plan can again focus on their strategy and their membership. We're going to move over to process needs. Business process outsourcing, or BPO, as we saw from Loran a few moments ago, can be a big driver for success. Health plans face challenges in standardizing processes, and a lot of that stems from the lack of the ability to measure. So as the saying goes, you can't manage what you can't measure. Process standardization, and in some cases having the industry knowledge for best practices, are really not within the view of the health plan when it's not a line of business or market where they have experience. Processes can be unique to a particular line of business or even a particular health plan. When a health plan is using BPaaS, the experiences gathered from multiple clients are used to reach optimal efficiency, which equates to standardization and best practice. BPO operations create metrics that are used to meet client needs, but also for ways to improve their own outcomes. In some cases, the metrics that are required for reporting for the health plan could be related to regulatory reporting requirements for a particular line of business, or it could be a report to review accuracy and timeliness to meet a service level agreement. But within a BPaaS operation, there's going to be other reporting used to measure the results from a process to see where improvements can be made. When a process is repetitive, the steps used to complete the process can be programmed to automate some or all of the work. So for example, a claims examiner had to view 2 claims in order to make a payment decision. Only some of the information from the original claim was needed to make the decision. However, it took multiple clicks, if you will, or screens open to get to the original claim. So instead of having to open multiple screens, the key elements of the initial claim were added to the view for the examiner on the second claim. This one change meant that the examiner did not need to open another screen to look up all the additional pieces of information. It definitely improved efficiency. And I'm just going to add here, it was a morale boost as well. Staff saw that leadership was listening to them. A change was made to improve their ability to do their job well. More efficiency, happy employees, win-win. So measuring outcomes is a process in and of itself. Analytics has to be about getting information in a format that's usable. What actions can you take to improve process or even the experience for a member or a provider is very important to the success of an organization. And that really leads me into technology. At this time, health plans are looking at what they have today, whether it's fully owned or outsourced, and they're finding that the technology is behind the times. And to add to that, the times are moving so fast that catching up is really no longer feasible. If the technology can't support the business needs today and the needs for the next, say, 3 to 5 years, maybe shorter even, then it might make sense to look outside. Resources in the market who know COBOL are getting more and more scarce. And even though you're all on mute, I did hear a few of you laugh. I'm just going to tell you. Technology must be able to expand to respond to market and regulatory changes. It's the expectation now that technology be web-enabled and available in a private cloud environment. Interoperability-enabled technology is just one recent example of change that involves technology. And depending on your current software solution, this could be a daunting task. We're all hearing about interoperability. CMS continues to build on its roadmap to improve interoperability and health information access for payers, providers, and most importantly, the patients. It should be on every health plan's roadmap to ensure that technology can deliver this functionality. Value-based care is happening right now. You heard Loran mention it a moment ago. Many older operating systems are just not built for that type of contracting that's happening in primary care and some other care delivery systems. These are opportunities to impact the health of your members and your bottom line. You're going to want to grow. We all want to have healthy growth in our business. So when you start 2 additional lines of business 2 years from now, is the technology that you have flexible enough to grow with you? Growing within a technology resource means everything from the ability to expand the environment where your data is processed all the way to getting correct journal entries to your financial department. Modular plug and play gives the plan the flexibility to add additional services or to expand without the need for extensive development, which means less time and money needed to adapt to the change. Reporting is important. How many times do you hear the word data in one day? The ability to return information quickly is a necessity for managing the health of members, which equates to managing the health of the plan, really, if you think about it. Equally important are data trends. We need to be on top of those regularly to see where do you have an opportunity to improve the experience for your provider or the experience for your member. Machine learning is something else I wanted to touch on today. You'll see that as the last bullet here under technology, artificial intelligence. I have occasionally been accused of having to learn the hard way. I don't know about you all, but if a process can be identified as repeatable, do you need a person to do that, or can you train your system to do that? Artificial intelligence and machine language can have a profound impact on how you run your business. Let me give you just an example of how profound this type of technology can be. Using robotics process automation, so I'm about to throw another acronym at you, RPA, this can improve post-adjudication by up to, or it actually has improved post-adjudication by up to 45% on current legacy systems of some of the clients we service. We've been working with clients successfully running this technology for the last 5+ years. That's pretty exciting when you can bring your auto adjudication up by that amount just by having a robot watching the steps in order to adjudicate a claim. Loran touched on these earlier, but I'm going to take a look at the different solutions and talk to them a little bit about what are the pros and cons that support these solutions. So an on-premise or fully owned solution is something where the health plan really has complete control. That means if you want to change the way you process a claim or you want enrollment to be handled a different way, not a problem. You just go on over to the technical department that sits on another floor of the building and you tell them what you want and get it done. That's a huge pro. It's a wonderful thing to be able to do. However, it's costly. And it means that you need to constantly be monitoring the market to ensure that you are keeping up with the changes with your own internal technology. So it's a lot of pressure on the health plan to keep up with technology. However, it does give the flexibility to make a change in any way, shape, fashion, or form that the health plan chooses to do that. When you've got software as a service, the second item here on the screen, you've got an integrated software solution, could be hosted or on-premise. The advantage there is you're relying on someone else to take the pressure off of the plan to keep up with technology changes. You're turning that over to a valued partner to be able to stand up a system that can handle additional lines of business, that can handle additional partners, that can handle additional processes or new types of services like interoperability that the health plan would not need to strategize on how to build that. They would need to check in with their service provider. And the health plan retains all of the day-to-day operations, so the call center, claims and enrollment, etc. But they've got the software tool with a partner, and that partner's helping them keep current. Business process outsourcing is where the health plan has the software. However, they may be experiencing a backlog. They may want to augment staff. They may need help with procedures. What is the best practice procedure to complete a task? And so this is a significant reduction in the total cost of operations when it comes to hiring and training and retention, because the health plan is not required to go into the market to look for those human resources. Those are provided by a partner, and they're able to be brought in and taken in and taken out on an as-needed basis. So when you need the help, it's there, and when you don't, you are not having to do a layoff or some other serious change. And the last one that I have here is a full BPaaS operations, and this is where the software solution and the staff that's needed to do the operational functions for the health plan are all combined into one. So in this model, there's not only a reduction in the staffing because that's been outsourced, there's also a reduction in the need to strategize on technology. How do I keep my technology current? How do I plan for interoperability? Is everything cloud-based? How can I get this information to a cell phone? Instead, the health plan can spend all their time focusing on strategy and the member experience. And isn't that really where we all want to be, is focusing on the strategy for our plan and for the member experience so that they make the choices that we need them to make to stay healthy. So let's go back to Loran and let him speak more on how to make a strategic decision.
Thanks, Kim. So Kim has just given us a great background on how health plans are using BPaaS to compete. And so we wanted to spend a little bit of time here, talking about, for health plans, how do they understand whether a BPaaS solution is the right solution for them, or how do they, or if an alternative solution is the right solution, and where on that spectrum of outsourcing, do they have critical needs? And so when we look at this, we think about this in a kind of a methodical approach to understanding what are a health plan's overall strategic priorities, and how do we align and evaluate the core capabilities of a plan to deliver against those strategic priorities. So what we've kind of outlined here is a sampling of core health plan capabilities. And so as we think about each of these in the plan ecosystem and the role they provide, we want to understand comparative to our overall organizational goals, whether that's excellence in member delivery, whether that's in the best in market relations with providers, or that is optimizing our cost structure for future growth, entering new markets, whatever those core capabilities and goals of a plan are, we want to evaluate and take an honest look at how do our current operational processes and technology enable us in the pursuit of those goals. And so we want to look at that from a couple different perspectives, but primarily we want to understand, for a given capability, taking claims administration, for example, what is the quality of our delivery from a people and process standpoint? Are we efficient? Do we have the right resources? What is the level of talent that we need now and in the future? From a technology standpoint, what is our current technology stack, and does that enable excellence in claims administration and core operational processes? How cost effective is our solution in this space? If we look at KPIs, what is our auto adjudication rate? Where are the gaps with that? What is our cost per claim processed? How can we improve that? And then finally, looking at compliance and risk and future scalability, we understand, does our current capability in this space, is it a strength or a weakness? Does it increase our ability to be compliant, to adapt to increasing regulatory needs, or does that pose a risk to our growth? And then finally, future scalability. Does our capability in this space, if it's adequate for today, will it meet the needs of the plan a year from now, 2 years from now, or 5 years from now? And those are kind of the key criteria that we want and plans can use to understand if there is an opportunity for outsourced services to fill any capability gaps that exist. So now that once you've taken as a plan a critical look at core capabilities and understand how they align to your organizational objectives, both in the short and long term, how do you evaluate whether a BPaaS or BPO solution meets the needs and capabilities that the plan has? And so once again, a thorough and thoughtful approach is really necessary to understand the cost and benefit of moving to a BPO or BPaaS solution. So I've highlighted some key questions that are helpful to ask when going through and understanding this process to make the best and most informed decisions that plans can. So one of those is, does this outsourcing capability improve operational delivery? First and foremost, will this make us better at a particular capability? Will this make us better at claims processing? Will this make us better at credentialing our providers? Will this improve the member and provider experience through our authorization process? The second question that we plans can ask is, does our current technology stack enable long-term flexibility and scalability? Does this, our technology, meet our needs now? But most importantly, if we're thinking a year from now or 5 years from now, and our growth plans or market expansion or improvement in capabilities relative to value-based care, does our technology allow us the control and the flexibility to adapt to those changing market conditions? Third on the list, we have, does this outsourcing capability focus or increase bandwidth for more strategic priorities? So if we're looking at core operational services, is this core operational service, is it close to the member? Is it close to the providers? Is it something that takes leadership bandwidth away from executing on core plan vision and strategy? If we move this to an outsourced or BPaaS solution, will this provide leverage for focus on those core strategic goals? And then last on the list is, we know this is a focus for everyone. Remaining cost competitive in the current market environment is critically important to all health plans. And so when evaluating a BPO or a BPaaS solution, plans really want to look at, over the long term, does this improve our ability to control costs? From an administrative perspective, that might mean a BPO or BPaaS solution provides stable or stable pricing over a longer period of time and more predictability when it comes to administrative cost control. It also means that looking at medical cost and understanding how does this impact our ability and flexibility to reach members and control unnecessary spend. All right. So now that we've gone through how health plans can evaluate their capabilities and really make strategic decisions around outsourcing versus insourcing, I just wanted to share a quick example of, from a client that we've worked with, of how this process plays out, and then I'll turn it over to Kim to share an example from Conduent. So this example is an example of AArete working with a regional multi-line payer with services across commercial, government programs, so across all lines of business. So the client need here was framed by an understanding that their administrative efficiency and cost effectiveness lagged market competitors. And they, with particular focus in the areas of call center, utilization management, care management, network management, they wanted to understand, are we operating in the most efficient way we can? Can we improve these capabilities? And does that improvement align better to an outsourced or insourced approach? So in this case, AArete worked closely with plan leadership and stakeholders at all levels to really understand and evaluate plan operations and the effectiveness of the core capabilities of the plans. So select functions were identified throughout this process for operational streamlining and effectiveness improvement. And in particular, this client was struggling with their credentialing process and efficiently, effectively meeting turnaround times in a cost-effective manner. So the end result of this program and process evaluation for the client was an overall reduction in annual program costs from a medical and administrative cost perspective of over $5 million. And in particular, for the credentialing capability of the plan, there was an opportunity identified to outsource this to a BPaaS partner in order to reduce the overall cost of the program, and most importantly, to improve compliance and turnaround times in this space, as well as a significant increase in provider satisfaction. So I'll turn it over to you, Kim, to walk through another example.
Thank you. Appreciate that. Let's see if I can get the slide to move one more. There we go. Thank you. Oh, I'm getting a little technical assistance there. So I want to talk to you about a trend that we are seeing in the market today. Our plans that are currently, they support Medicaid lines of business, and they're looking either to add a D-SNP plan to complement the Medicaid plan for their dual eligibles, and in some cases it's to mitigate for the sunsetting of the Medicaid plan within their state, based on some of the new CMS legislation. So in this case, we had a Medicaid plan that was preparing for the future by offering a D-SNP, but they also wanted an opportunity to improve their provider and member satisfaction. So there were a few challenges. The plan was very experienced in Medicaid, and they supported a large population in their state. The company as a whole, though, lacked knowledge of Medicare Advantage. They didn't have software to support the CMS member management steps. Getting up to speed on compliance was also a hurdle. The volume of desktop policy and procedures had to be completed in time for the readiness audit. And the client wanted to be sensitive to the fact that while providers understand that to get full payment on a Medicaid patient who also has Medicare, the patient claim would be required to be submitted twice, once to the Medicare payer and then to the Medicaid payer. But since the client was going to be both, they wanted to simplify that as an added service to their providers. So choosing the solution that fit meant being able to expand the environment for the new offering and have the flexibility to do that again in the future if needed. They were thinking along the lines of adding some other additional lines of business post this change. It meant taking advantage of best practices for enrollment, call center, and claims processing for this other line of business. Those best practices, or processes, if you will, were already being used by the staff who would be assigned to the work. So the learning curve by choosing a BPaaS operation on that line of business didn't exist. There wasn't a learning curve. The desktop procedures were already written and in place and tested essentially by virtue of the fact that the same work was being done for other clients. So the readiness audit preparation was minimal for the health plan. And the plan was able to take advantage of built-in functionality to pay the provider for the entire amount due under 2 different payment contracts for one claim. So the result was that the client was able to make a decision to move forward into a new market within about a year. All the components required to participate in that market, from sales to training to claims processing and payment and even compliance, were in place. The CMS readiness audit was a success. Provider relationships were enhanced by offering the ability to process payments with one claim submission and less of a delay in payment to the provider for the secondary payment. Compliance was built into each part of the solution and the processes entrusted by the health plan. And probably one of the most satisfying results at the end of the implementation was the peace of mind. The health plan had assurances that the solution fully supported future interoperability rules. The plan had the other benefit was the plan had an accountability partner for monitoring regulatory changes that impact this line of business. That helped ensure that the solution was prepared to take on whatever new thing that came along. Didn't only just meet the client's general needs, but remained in sync with CMS and the CMS requirements. So overall, the client was very happy with adding this additional line of business and be able to do it with some degree of speed and to bring on the experienced staff to do the work. So with that, Monica, let's see if we have any questions.
Thank you so much. At this time, we are going to address some questions that have come in during the presentation. And as a reminder, please go ahead and type your question into the Q&A box located on the right-hand side of your screen, and press enter. And we have several questions that have come in. So the first one we're going to address looks like it's for Loran. What are the primary risks when making shifts to the BPO, BPaaS solutions, and how do I minimize them?
Thank you. And I think taking that question of, what are the primary risks, and really the key here and how you address these, and in one word, is planning. Having a full and complete picture up front of the health plan's capabilities and goals over a given period of time that they would look to implement a BPO or BPaaS solution is critical. I would say, second to that, as part of that planning effort and upfront risk mitigation, is really understanding and making sure that business requirements drive any technology decisions. So really understanding, the technology or platform that you're evaluating, understanding what its limitations and capabilities are, and making sure that through that process, you're aligning those to the core business requirements of an organization and making sure that those drive solutions. I would also add that other critical components to mitigating risk in the implementation of any BPaaS solution is really effective training, having a clearly defined training plan to increase adaptability among users is critically important. Effective data migration is also, and having a plan in place is another important example of a way to reduce risk. And then finally, I would say that documentation, we all know it, but having clearly defined policies, procedures, delineation of responsibilities between a plan and a partner are all of critical importance when mitigating risk during a BPaaS transition.
Thank you. Looks like the next question has come in. It's for Kim. Is it possible for health plans to outsource only select functions, such as only enrollment or only claims? Thanks.
Thank you, Monica. Yes, absolutely. Health plans will outsource the pieces and parts that they're not prepared to do themselves, or maybe are just a heavy lift. So in some cases, we have health plans who we only process claims. Some we only handle enrollment, some we only handle mailroom, and some we handle the whole ball of wax. So that is the beauty of working with a partner, a trusted partner, is that you're able to say, use some of the tools that Loran showed you today, make a decision on where do you need the help, and then reach out and find a partner to provide that help. So hopefully that answered that question. But absolutely, BPaaS operations are there to support whatever the client may need, be that one line of the operation or all.
Yeah. Next question, it looks like it's for Loran. Can you give an example of SaaS?
It's a great question and a great way to level set the conversation. So I think when we think of a health plan and typical services that we increasingly see provided as software as a service, I would highlight member and provider portals. So those typically we see quite a few plans that would outsource that capability in the software infrastructure to a third party with specialty and capabilities in developing a member or provider facing platform. Another good example would be care management and population management software, where we'll typically see plans who want to remain close to the member, providing those care management services, but leveraging a SaaS solution from an external partner to provide the software platform for the health plan's care managers to utilize.
Thank you. Our next question looks like it's for Kim. It reads, as you work with health plans to evaluate these options, what are the top 2 reasons, 1 and 2, reasons no decision is made?
Wow, that is a great question. I will tell you that the top two reasons that decisions that are not made within the request for proposals that we've worked with, one has been changes within leadership within the organization during the process, during the selection process. And secondly, it's a little bit of cold feet on, the devil, sometimes is better than taking the risk. But if no plan is chosen, especially if a plan's gone to the market and done a thorough request for proposal or request for information, typically, like I said, something's interrupted the health plan and from a leadership perspective, or they're just a little nervous about making that jump with bringing their history, et cetera, over. I hope that answered the question.
Thank you. And this one looks like it's for Loran. How do I understand ROI investment when evaluating current technology stack?
So I think when plans are looking at their current technology stack, they need to take a holistic, organization-wide perspective of how this impacts their profitability as well as their strategic goals. So that includes consideration for baseline costs. So from an administrative cost perspective, how does this impact our technology costs? How does this impact our resource availability and allocation costs? And then, coupling that with how does this outsourced, software or capability impact medical cost? Does this allow us greater flexibility or less flexibility to address, changes in utilization through what we're seeing come through it from a claims perspective? So once you kind of have that baseline cost perspective involved, understanding, how does my current technology stack and platforms that I'm utilizing impact, administrative and medical cost? You want to understand, okay, what's the flip side of making a decision and moving to an alternative solution? And so, the ability to control those things is important. But then, you would also want to make sure to add in consideration for those overall plan strategic objectives, which I spoke to earlier, including growth and member and provider relations. So you want to kind of take that holistic perspective of how does this impact me from a direct, cost standpoint? How does this impact my ability to manage costs going forward? And then how does this enable delivery against other non-directly financial related strategic initiatives?
Yeah. And looks like one last question has come in. Looks like it's for Kim. If a process is outsourced, can the health plan still make changes or update themselves without incurring delays and costs like annual benefit changes?
Great question. So when you're looking at software as a service, or you may even be using BPaaS operations and you want to weigh how you want to handle upcoming changes, be sure to check with your partner, the company that you're looking to move with, to see if you can do some of those configuration changes yourself. You can absolutely take some of those processes in-house. You don't have to turn all of those over to the vendor. And so I would encourage you, when you're looking, to be sure and look for a vendor that would give you that flexibility should you want to have that as a part of your in-house operations and not an outsourced function, especially those annual changes. And I know we're right at time, so I'm going to turn this back over to Monica.
Thank you. Thank you so much for that great presentation and for sharing your thoughts. And thank you to the audience for participating in today's webinar. This concludes today's presentation. Thank you again, and enjoy the rest of your day.